Welcome to the Universal Accounting Center's Advancing Your Accountability with your accounting instructor, Alan Bostrom. In Session 6, Accounting for a Manufacturer, you'll learn about inventory accounts used in manufacturing. And you'll learn how to determine if an expense is a manufacturing expense or if it's general overhead. Finally, you'll learn how to figure the selling price for a manufactured product. Now here's Alan.
We're going to start out with a discussion on manufacturing. Manufacturing is a process-oriented accounting system. What that refers to is that we are tracking a process from the raw material stage all the way through the finished product. Now, when you're dealing with General Motors, you have thousands of engineers and thousands of accountants working together to do that process. It's very detailed, it's very maintenance intensive, takes a lot of time and effort to be able to track it through, and it's very precise. On General Motors assembly line, every day, all day, you will see men or women walking around, white coats with a stopwatch in their hands. What they are doing is they're timing every part of the assembly process. They know exactly within fractions of a second how long it takes to put a bolt into the car, how long it takes to install the steering wheel or each of the tires and wheels. They know those things because they've practiced it over and over and over again and timed it. And if one part of that line becomes inefficient, what happens to the rest of the line?
It gets all slowed down.
It's also a problem, right? So they have to watch that very closely. Now, when you're dealing with a small manufacturer, the story is totally different. And I'm going to relate several times to experiences I had working in a camper and trailer factory. Okay? I worked there for about 3 months one summer, and they followed the assembly line process. Much like, in that respect, General Motors does, but that's where it ends. Okay? All other similarities end there because it was not a very sophisticated assembly line. It was a slab of cement, and we pushed those campers down that line as we finished them. That line moved only as fast as the previous weekend's party allowed it to move. If the previous weekend was a hard partying weekend, it creeped along. Okay? So it's a whole different animal when you're dealing with small businesses. Now let me show you here the process we're talking about. Anything we manufacture requires two components. One component is called raw materials. Now those are actually the items that we buy that become a component part of the finished good. Then the other one is called direct labor. You've got to have someone to put these two components, these components together in order to complete the finished good. Now, when you blend these two groups, you get the assembly line that we're going to call work in progress. And this is where that assembly line sits, right here. And I'm going to use this conveyor belt to represent the assembly line. And as we bring in more raw materials and there's more people to assemble these things, we have an item that gets more and more close to being complete until finally that item comes off the end as a finished good. Okay? Now, we've talked a lot about inventories in the past few weeks. Where do inventory accounts sit in the general ledger? What section?
Assets.
Current assets, right? In a manufacturing plant, we're going to have 4 inventory accounts. We're going to have raw materials inventory, direct labor inventory, work in progress inventory, and finished goods inventory. Each of them are, again, current asset accounts. Within each of these inventories, it will reflect the values that go into them, what is in those inventories at any one time, and then we're also going to show what value goes out of them. Now that's where the process is involved, and that's where we come in. When you're looking at General Motors or Ford Motor Company or some of those large manufacturing companies, and someone on the assembly line needs raw materials, let's say that you happen to be the person that installs steering wheels into the car, okay? Well, you know, as the more cars that come, the more steering wheels you need, right? And so as you have more cars come, you might find that your steering wheels that you have available for you are running down. So you quickly make a phone call to the raw materials warehouseman. And the raw materials fellow, you say, listen, I need 20 steering wheels shipped immediately over to me. And he says, no problem, we'll have them over. At that point, there's a document prepared. And that document says, transfer 20 steering wheels from raw materials inventory into work in progress. Now, how often do you think we prepare a document in General Motors, one of these transfers? Probably hundreds every day, wouldn't you think? Go in there. And so every time that someone requests a part from raw materials into work in progress, we're going to prepare one of these. Okay? Now that's in a large corporation. That's a lot of work, keeping track of all those papers. The accountant takes those papers and then makes the entry. And he's going to credit raw materials inventory and debit work in progress inventory. Do you follow that? Every time that happens. A lot of times. Hundreds of times. Every day. Now, if you're a small little manufacturing company and you're sitting there working on the assembly line and you need parts, what do?
Get up and run to this parts room.
That's right. Get up and run over there and get them from the parts room and bring them in, right? Mm-hmm. Okay. Do you write a document? Do you prepare a document?
Nah.
You don't? No. Obviously not. You don't have time for it, right?
Check it out.
You think we did in that camper factory?
No.
No. We sent a guy over there, okay, to get the parts for us, and they brought him back. He never made a note that that's the case. So as accountants, we don't see those day-to-day transfers from raw materials inventory into work in progress. Well, and you know, another advantage is to that, we don't have to make those transfers every day. So what we have to do is we have to adjust the system to be able to accomplish the same thing, but do it in a shorter period of time and be just as accurate. So what we're going to use in our modified system here, to modify it for our smaller size, is we're going to use an old friend that we've used many times before called specs. Do you remember that? What does specs refer to? Do you remember? What does ES refer to in specs? Starting inventory plus purchases minus ending inventory equals cost of sales. Okay? We're going to have one in each of these inventory categories. Using that as a tool, we can determine how much raw materials inventory moved into work in progress. How much direct labor inventory moved into work in progress. And then finally, how much work in progress finally moved into finished goods.